Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is March 26, 2012 and we are currently looking at price action on the 10-minute chart. And as you can see, the market has been primarily bullish today, and actually for the last few days and you can actually say last few weeks, we've been in this bullish trend in the market, and the pair had on today extended its rally higher, and of course it's continued its gains higher from last week, and we see the strong bullish momentum during the second half of today's trading session. And this was due primarily to some statements released by Fed Chairman Bernanke. He uttered some dovish statements that hinted towards a possible another round of quantitative easing, or QE3. So then this caused the market to take on more risk appetite. So we see this risk on move in the market after these statements, and we saw the pair rally 176 pips from the session low here at 31.92 all the way to the session high here at 33.68 for about a 176 pips. So then right now we can see that price is consolidating below this resistance at 33.60, 6 ahead of the Asian Open. But if you glance back towards our Asian session, you can see that the pair was trading lower. Of course, it began to slide lower on euro weakness, and this was a correction or pullback that could have been a result of some profit taking from last week's rally. So then we see there was a slide in the pair, and it found support around our 3200 psychological zone. But this was not only our 3200 psychological zone, but it was also where our ascending trend line support was placed. Now let me go to the 3-hour chart so I can show you where this ascending trend line support comes from. So then, as you can see, our ascending trend line started on March 14th. We drew it in from the March 14th low, and of course, this was the second dip on March 22nd. But you can see how it formed support here on March 26th, and how the pair began to rally and extend its gains higher. So then you can see on multiple occasions, price attempted to test this area, this ascending trendline support, but it couldn't break through. So then, of course, this gave us reason why there was such great demand here, and you saw the pair extend and continue its gains higher. But of course, we could see that this was our ascending trendline support, but it was not just our ascending trendline support. It was also a 61.8% Fibonacci retracement level. Now, I'm on my 30-minute chart, and if I was to draw in a Fibonacci retracement from last Friday's high here at 32.94, down to last Thursday's low at 31.34. Let me change the color of this to purple. You can see, if you glance across, you can see that this was also where our 61.8% retracement level was drawn in. So you can see this last swing up from Friday, from last week, created this 61.8% retracement level. So right here, you see this area of confluence here, which proves to us why there was such great market demand here. We see that this was not only our 3200 psychological zone, it was also our ascending trendline support, and also a 61.8% Fibonacci retracement level. So then let me go back to the 10-minute chart. So with that being said, if you were in front of your platform at this time and had an understanding that this was a strong area of support, then you could have actually entered a buy order upon bullish confirmation at this ascending trend line support, or this area of confluence, and you could have held on to your trade until it reached our daily pivot point level at 32.51 for about a 50 pip trade. So this was one trade you could have entered during the European trading session. However, if you were not in front of your platform at this time, then what you could have done, you could have traded on a pullback towards a support. You could see that, of course, the pair passed our daily pivot, and it pulled back towards this this support level, which is our 38.2% Fibonacci retracement of the major drop on our daily chart. And let me just move to our daily chart so I can just show you what I mean. Like this move lower from last year October's high down to the low here in January is what formed this 38.2% Fibonacci level. And I know it can be kind of difficult to see, but that's what I mean from the major drop from on our daily chart. But let me go back to the 10-minute chart again. So you can see that price had broke through our daily pivot. It stopped around our 100 simple moving average line and began to retrace, and it found support at this 38.2% Fibonacci retracement level of the major drop on our daily chart. So then if you were in front of your platform at this time, then you could have placed a buy order here upon bullish confirmation. And it was also at this time when the market began to move on Bernanke's dovish statements. And you could have actually held on to your trade and closed it out at this area of resistance at 32.90 for about a 45 pip trade. Or you could have held on to the strong bullish bias since the market was very bullish today. You could have held on to the bullish momentum and closed your trade out towards the end of the trading day up here near this resistance at 33.65 for about a 120 pip trade. So then, of course, these were two entries you could have entered today. You could have entered at this ascending trend line support or this area of confluence, or you could have entered on this 38.2% daily Fibonacci retracement level. And there was also other areas you could have entered in as well, other pullbacks in price that you could have entered in. But these two were good areas that you could have entered buy orders on. So then right now the pair is consolidating below this 33.66 resistance ahead of the Asian Open. And what we may see, depending on how the Asian trading session opens, we may see it retrace lower, and it may retrace back to this 3300 psychological area and find support there. Let me move. It may find support there and continue its gains higher, or it may we may see further consolidation and range bound activity until the pair breaks this resistance here at 33.60 and extend its gains higher. But for the most part, the market is primarily bullish. The sentiment is risk appetite in the market, so then we should see further gains higher eventually. But like I said, we may see a retracement back to the 3300 level, and then it continues its gains higher, or we may see more range bound activity and then it break through this resistance. But either price movement can happen, and but that's it for our technical analysis review for today, and I will be talking to you guys later. You guys have a wonderful day. Bye.